So in this edition of Back to the Basics, we're going to cover off some questions we've seen around the principal residence exemption. So over the course of the last few months, we've been working on some estate plans for clients in conjunction with the Wellington Altus Advanced Wealth Planning Group, as well as our outside professional network. Now, in terms of principal residences in Canada, generally, the sale of your principal residence is a tax-free event. There is no capital gains tax due. And there are a few exceptions to this, most common being that you're a non-resident, that your CRA believes you're in the business of buying and selling homes or flipping homes, or you fail to report that sale of your primary residence on your tax return. So it is important to remember to do that if you want to receive the tax-free status. Now, there are a couple of common nuances with the rules around principal residences that it's important to understand. The first is that there's some very broad language around what defines your principal residence. The language that they use is that it is somewhere where you ordinarily inhabit. So that is very, very broad, and that also can and does include recreational property. So that's something to keep in mind. And the second thing it's important to keep in mind is that you can select which of your properties was your principal residence for tax purposes on a year-by-year basis. You can only have one per year, but you can shift it. So if you're to think about this, it is possible for you, or for instance your executor, to do a good job of minimizing taxes by, for instance, declaring that a recreational property was your principal residence during years in which that recreational property appreciated sharply, and then declaring that your city house was your principal residence in years where there was not much appreciation there. So it gives you an opportunity to really limit taxes, and this is a very, very useful tool in minimizing the taxes in your estate or just in your general circumstances if you're thinking of buying or selling different properties. Now, individual circumstances will vary, and there are some nuances that come into play when you're dealing with trusts or if there are, for instance, disabled children in the family. So these are all things that are important to understand. So I always want to make sure that you are relying on professional advice, so please seek out the advice of a tax professional when looking at this type of planning work. But we are here to make sure that we're helping you address some of the general questions and make sure you're aware of the lay of the land.